Welcome to Spiritual Crypto, the channel to help you understand the spiritual aspects of crypto and money, giving you the insight to succeed in the cryptoverse. In this video, I'm going to take you on a journey to explore some shocking truths about taxes and why 99% of Americans are not required to pay crypto taxes. To help you see the truth about crypto taxes, let's go to page 492 of this Supreme Court case to learn about how legal definitions work. It is imperative that you understand legal definitions and how they work, because they contain the keys to decrypt the codes of tax laws. When a statute includes an explicit definition, we must follow that definition, even if it varies from that term's ordinary meaning. It is axiomatic that the statutory definition of the term excludes unstated meanings of that term. This Supreme Court case acknowledges that an explicit definition takes precedence over a general definition. I will show you an example of how this works later in this video. This case also acknowledges that any meaning of a term not included in its definition is excluded. For example, if our definition states that the term United States means a citizen of the District of Columbia, the definition only includes citizen of the District of Columbia and nothing else. Therefore, all citizens outside of that district are excluded from that definition. Keep this rule in mind when we study Title 26. Before we study Title 26, let's visit irs.gov and coinbase.com to read some important information about tax and cryptocurrency. This is the IRS website, and this page talks about digital assets. You may have to report transactions with digital assets such as cryptocurrency and non-fungible tokens, NFTs, on your tax return. Income from digital assets is taxable. What is a digital asset? For U.S. tax purposes, digital assets are considered property, not currency. A digital asset is stored electronically and can be bought, sold, owned, transferred, or traded. The tax definition of a digital asset is any digital representation of value recorded on a cryptographically secured distributed ledger, blockchain, or similar technology. Examples of digital assets. These include convertible virtual currencies and cryptocurrencies such as Bitcoin, stablecoins, non-fungible tokens, NFTs. So this is from Coinbase. U.S. taxpayers are required to report crypto sales, conversions, payments, and income to the IRS and state tax authorities where applicable, and each of these transactions has different tax implications. In the U.S., crypto is considered a digital asset, and the IRS treats it generally like stocks, bonds, and other crypto assets. Like these assets, the money you gain from crypto is taxed at different rates, either as capital gains or as income, depending on how you got your crypto and how long you held onto it. To understand if you owe taxes, it is important to look at how you used your crypto. Transactions that result in a tax are called taxable events. Those that don't are called non-taxable events. Let's break them down. Non-taxable: buying crypto with cash and holding it, donating crypto to a qualified tax-exempt charity or nonprofit, receiving a gift, giving a gift, transferring crypto to yourself. Taxable as capital gains: selling crypto for cash, converting one crypto to another, spending crypto on goods and services. taxable as income, getting paid in crypto, getting crypto in exchange for goods or services, mining crypto, earning staking rewards, earning other income, getting crypto from a hard fork, getting an airdrop, receiving other incentives or rewards. The two articles that we just read agree that income from cryptos is taxable. But be aware that they did not cite any laws. Is there a specific law requiring Americans to pay crypto taxes? As of April 2025, there is no specific crypto law requiring Americans to pay taxes on crypto transactions. However, for tax purposes, the IRS treats cryptocurrencies as property and uses its interpretation of the Internal Revenue Code to apply existing laws on digital assets such as cryptos. Because of this, we need to study Title 26, also known as the Internal Revenue Code, to determine who is required to pay federal income tax. Last month, I published a video about Title 26 on my Revelation Knowledge channel. Let's watch that video to learn some very important information about Title 26. Keep in mind that what I'm about to review to you in regard to the IRS is not my opinion. It is information based on certain forms of the IRS and laws published in the United States Code. I know studying law is not fun for most people, but if you know the law and how to exercise it, the IRS will leave you alone. Let us start this investigation by studying Form 1040 instructions for the tax year 2024. On page 8 of this Form 1040 instructions, there's a sentence that says, "These rules apply to all U.S. citizens regardless of where they live and resident aliens." A very important term that we need to study in the previous sentence, in this sentence right here, is U.S. citizen. But first, let us go to Office of the Law Revision Council's website to see if there's a law requiring U.S. citizens to pay income tax. This is the official website where you can find all the titles of the United States Code. The United States Code is a consolidation and codification by subject matter of the general and permanent laws of the United States. It is prepared by the Office of the Law Revision Council of the United States House of Representatives. The title that has information about income tax is Title 26. Right here, Title 26, Internal Revenue Code. Before we study some of its definitions, let us go to Code of Federal Regulations website and study section 1.1-1. Section 1 of the code imposes an income tax on the income of every individual who is a citizen or resident of the United States, and to the extent provided by Section 871B or 877B on the income of a non-resident alien individual. Section 871B, that deals with resident alien individual, and I will talk about that later on in this video. Let us now go back to Office of the Law Revision Council's website to study the definitions of the terms person, United States, and state. To find the definitions, we need to scroll down to section 77 01. When used in this title, that's talking about Title 26 here. When used in this title, were not otherwise distinctly expressed or manifestly incompatible with the intent thereof. What this phrase right here means, this phrase here, what it is saying is that if a term is explicitly defined in this section, then that explicit definition takes precedence over the general definition of that term. For example, if the general meaning of the term United States citizen means a citizen of the 50 states, but in a subchapter of the code, United States citizen is explicitly defined as a citizen of the District of Columbia, the explicit definition takes precedence. Thus, the general definition is not applied to prevent contradiction. Let us now study the term person. The term person shall be construed to mean and include an individual, a trust, estate, partnership, association, company, or corporation. Let's go down here to United States. The term United States, when used in a geographical sense, includes only the states and the District of Columbia. State. The term state shall be construed to include the District of Columbia, where such construction is necessary to carry out provisions of this title. So you notice that states here is plural and singular, but that doesn't matter here because it's not specific here. It doesn't talk about the 50 states. So it's the term United States here, it includes only the District of Columbia because state here is defined as District of Columbia. So the 50 states is not included here. And I will show more evidence of that later on in this video. Let us read this Supreme Court case here to see if the U.S. Supreme Court agrees with the statement that an explicit definition takes precedence over a general definition. And this court case was decided on June 28, 2000. So let's scroll down to page 942. When a statute includes an explicit definition, we must follow that definition, even if it varies from that term's ordinary meaning. It is axiomatic that the statutory definition of the term excludes unstated meanings of that term. So if something is not included in the term, in the definition, then it is excluded. So we go back to this page here and go look at United States. See, it does not include the 50 states here. It only includes the District of Columbia. Two other terms that we need to study are trade or business and non-resident alien. So scroll down here to trade or business. The term trade or business includes the performance of the functions of a public office. And this is what we need to pay attention to here, public office. Note that a public office holds the power to carry out some governmental functions. Therefore, this definition here is referring to government employees, but to be more specific, it is referring to federal government employees, not state government employees. Scroll down here a little more. Okay, so non-resident alien. An individual is a non-resident alien if such individual is neither a citizen of the United States nor a resident of the United States within the meaning of subparagraph A. So United States here it is talking about the District of Columbia, because this is still Title 26. So when you go up here, the definition of United States right here is District of Columbia. Remember when I read this part here, when used in this title, see, it's talking about this title. So these are the definitions. For an important definition of non-resident alien, we need to go to section 871B on this page. Imposition of tax. Income connected with the United States business graduated rate of tax. A non-resident alien individual engaged in trade or business within the United States during the taxable year shall be taxable as provided in Section 1 or 55 on his taxable income, which is effectively connected with the conduct of a trade or business within the United States. Now let us reread this in the decoded version. A non-resident alien individual engaged in trade or business, that means the performance of the functions of a public office within the United States, which is the District of Columbia, then the taxable year shall be taxable as provided in Section 1 or 55 on his taxable income, which is effectively connected with the conduct of a trade or business, which means the performance of functions of a public office within the District of Columbia. This is what I like to refer to as word magic. Now you see why it is so important to pay attention to definitions, especially legal definitions. If you do not pay attention to legal definitions and study them, it makes it easier for attorneys to trick you into doing something that you are not legally required to do. Let us read more definitions in regard to income tax to see why it is important to study them. This is still Title 26, but it is Subtitle D, Chapter 38. And this refers to tax on petroleum. Here's another definition of United States. The term United States means the 50 states, the District of Columbia, the Commonwealth of Puerto Rico, any possessions of the United States, the Commonwealth of the Northern Mariana Islands, and the Trust Territory of the Pacific Islands. United States includes continental shelf areas. The term United States includes any foreign trade zone of the United States. So here, why did they include the 50 states? This is still Title 26, remember that. They included 50 states because this is talking about, referring to tax on petroleum. If we go back to this title, subtitle F, Chapter 79, here the definition here is referring to, the tax is referring to an individual, a trust, estate, partnership, association, company, or corporation. And so here as an individual, okay, they do not have the authority to tax an individual that's not that's outside of the District of Columbia, so that's why they don't include the 50 states. So that's the difference. So they know what they're doing, and that's why they know what they're doing, so that's why they are very specific about the definitions. So all these, the 50 states, District of Columbia, Commonwealth of Puerto Rico, etc. These states can be taxed because this is referring to tax on petroleum. Let us read another Supreme Court case to help us see through the income tax deception. This Supreme Court case was decided in November 1917. In the interpretation of statutes levying taxes, it is the established rule not to extend their provisions by implication beyond the clear import of the language used, or to enlarge their operations so as to embrace matters not specifically pointed out. In case of doubt, they are construed most strongly against the government and in favor of the citizen. So, if what they write in their definitions, if it's not specifically pointed out, then they're not supposed to extend. They cannot extend their provisions beyond that. So, for example, here when we were talking about individual, and this is Title 26, and it's talking about referring to taxes here. See, it doesn't include the 50 states, so they cannot go back here. They cannot extend the provisions beyond that because it is not included. They can only enforce people to pay. They can only enforce people to pay income tax. People who live in the District of Columbia and are performing functions of government. Remember that under the Internal Revenue Code, Americans are not United States citizens unless they reside in Washington, D.C. and work for the federal government. Take note that for nationality purposes, Americans are United States citizens and state citizens. It all depends on the definitions, so pay attention to the definitions. Let us now turn our attention to Form 1040. If you look at this section, it says U.S. Individual Income Tax Return. U.S., it is talking about the District of Columbia. So this is not referring to citizens and individual of the 50 states. Okay, it is talking about the District of Columbia. So if you go back here, remember United States, that is talking about, here's the definition, the District of Columbia. And this is Title 26, the Internal Revenue Code. Be aware that if you sign the Form 1040, you state under penalties of perjury that you owe the IRS money. See right here? Under penalties of perjury, the IRS, which is also known as the Internal Revenue Service, is using legalism against the American people, similar to how the Pharisees used legalism against Jesus and his servants. The Pharisees were one of the groups that played a key role in pressuring Pilate to sentence Jesus to death. On a spiritual level, the IRS is currently an organization used by Satan and his minions to steal our currency, which represents our spiritual energy, to finance their one world currency, one world government, and one world religion. They are waging a spiritual war on our souls to steal our currency so they can use it to finance their kingdom of darkness on earth. There are many people in the freedom movement, or what some people refer to as sovereign citizen movement, who believe that United States nationals are exempt from paying federal income tax. Let's go to Title 8 and study some of its definitions to clear up the confusion about United States citizens and United States nationals. Title 8, Aliens and Nationality. The term national means a person owing permanent allegiance to a state. The term national of the United States means a citizen of the United States or a person who, though not a citizen of the United States, owes permanent allegiance to the United States. And this part here is talking about American Samoa. And here you can see that national of the United States also means a citizen of the United States. So a United States national is the same as a United States citizen. Based on Title 26 of the United States Code, only citizens of the District of Columbia, residents of the District of Columbia, or non-resident aliens working within the District of Columbia for the federal government are required to file federal income tax. Take note that under Title 26, a non-resident alien is an individual who is not a citizen of the District of Columbia or does not reside in the District of Columbia. In other words, United States citizens of the 50 states are defined as non-resident aliens under Title 26. The only non-resident aliens who are required to file income tax are the ones who work for the federal government within the District of Columbia. This means that roughly 99% of Americans who are United States citizens are not required to file federal income tax. Therefore, they are also not required to pay crypto taxes to the IRS. So, should you not pay crypto taxes? That is up to you to decide. You are responsible for your own decisions and actions. I am not here to give you legal advice or force you to do anything. With that being said, I encourage you to pray to God to guide you to study the right tax laws so you can use those laws to stop the IRS from levying your bank accounts and assets. Furthermore, pray to God to give patriotic politicians the courage to pass bills to stop the IRS from abusing its power. Praying to God is essential for destroying the power of the IRS, because behind the scenes of the IRS is a spiritual battle between good and evil. Thank you for watching my video to the end. If you enjoyed this video, I encourage you to like this video and subscribe to my channel. Thank you again for watching, and I hope to see you in the next video.